Now, ITC has reported a weak first quarter, missing street estimates across segments as the first full quarter of the sharp excise duty hike weighed on its cigarette business. And my colleague Snehi joins us with more details. So, hi Snehi, good morning. Tell us more, please.
Well, yes, so ITC is going to be in focus on the back of weaker than expected set of Q1 earnings. Just taking you through what the overall scorecard looks like, it's a miss on all fronts versus what the street was estimating. The net revenue, that's the revenue minus the excise, if you subtract that, net revenue has fallen by about 14.5% on a year-on-year basis. EBITDA is down 28%, net profit is down 27%, and there's a significant margin pressure this time. A 500 bips fall coming in on the margins at 26.7% compared to 31.7% on a year-on-year basis. Now, of course, these numbers are not exactly comparable with each other on a year-on-year basis because this is the first full quarter where ITC is dealing with the impact of tax hikes. Because remember, the excise duty hike by the government came into effect on 1st of February 2026, which would make this quarter the first quarter in which ITC is dealing with this impact. Now, if I take a look at what the excise duty number is, it's come in at 10,000 crores compared to just 1,300 crores on a year-on-year basis. So that's a very sharp hike of 7.5% on a year-on-year basis. Talking to you about what the segment performance has been like, it's not been all that bad because while you have weakness coming in cigarettes and agri, you've got FMCG that's done excellently well for itself, and you've got the paperboard business that is in line with street estimates. Talking about the cigarette business, the gross revenue has seen an uptick of 80% because of price hikes, but look at the net revenue number. Without these price hikes, that number is still lower by 25% on a year-on-year basis. The estimated fall in terms of volumes by brokerages is around 5%, and management has said that they have taken calibrated price hikes and more than 30 plus portfolio interventions. FMCG has done well, up 12%. Dairy, snacks, noodles, frozen snacks have seen more than 20% growth. Agri has been weak, paperboard has been in line. Taking you through what the brokerage outlook has been on these numbers, Jefferies, PL Capital and Nomura have upgraded the stock on the back of a better than expected fall in the cigarette volumes that they've seen. The cigarette volume has fallen by 5%. The street was estimating a 10% fall, so much better on that front. And all three believe that the worst for the stock is behind us. Goldman Sachs, Nuvama and JP Morgan have maintained their rating but cut the target price. Target price has been maintained by Macquarie with a neutral stance. And target price has been hiked by HSBC to 320 from 310. So that's an all-round update coming in on ITC's Q1 earnings, weaker than expected, but brokerages believe that the worst is behind for the company.